Why didn't y'all say something? I forgot to push the button. I'm sitting here talking to myself the whole time. Oh my God. I thought y'all were just trolling me and being funny. What's up? I forgot to push the live button. All right, I'm talking to myself. What the hell? No, I was streaming to nobody. I've been talking for like 15 minutes to myself. Yeah, 30. I've been here for like half an hour. One person's like, "Is this thing started?" I thought Jose was just trolling me. All right. Thank you. Feeling a little bit better. All right, so Trump era trading. Be very careful. He tends to say stuff that creates strong market movements. Just very quickly, like last night and the day before, Trump is talking. You guys remember the speech during the inauguration? He's talking. He's like, we're going to secure the border. We're going to drill oil. We're going to do all this other stuff in the military. And then we're going to make... Then he's like, hold on, let me show you on the chart. Then he's like, we're going to do all this awesome stuff. Then we're going to boost production in American cars, make more American cars than ever before. Crickets for like 3 seconds. The market just dips, comes right back. Trump's very volatile as a president as far as his announcements. The market's very sensitive. Never trade a Trump era market. Just know that stuff he says makes volatility happen. So don't not watch his Twitter like a hawk, and don't not be prepared for the things he say to kind of dump things. Last night, just chatter about tariffs, dude. Market dipped and recovered. Like it's just what happens. Okay. Greater market's back since December 6th made the tweet that the bull market was back. We're going to look at all of our signs of greater market, see things are good. 4% of days closed outside the band, 60.74 NASDAQ. S&P 59.90, S&P at the bottom, 8% below. We have tapped the upper band in NASDAQ. It's usually the end of my trading day once it's happened. I don't usually bet on it happening twice. We hit it pre-market before the dump. NASDAQ spanned both sides of the bands. Very interesting. So today we're going to be very cautious, and we're going to look very closely at the liquidity maps to see what we get. Okay. If this is... Okay, so interesting to see Qs down here. Let me open up the map really quick. So as you see off to the top right, the greater market liquidity map is slightly bearish off of blue. So inside of here, this is resistance trade to somewhere. If that resilience number is less than half, then this is support there. So we're trading between both of these areas right here. We'll see how that plays out. I'll short off of here if this orange number is less than 0. And this orange number is greater than 0. So I don't do the short. So I sit out on this one. That's my rule. So if we look at the liquidity map diagram, the new one, it's pretty cool. Hopefully you guys like it. Let me load it up real quick. So any shorting off of MHP requires MRES to be less than 0, the orange indicator. It's not, so I'm not, it's likely to pull back, but I don't have a good short confidence setup on that. So what I do is I let this pull back to see if there's any kind of support below. It doesn't look like there's anything nearby. So let's look at S&P. So this is a little bit of selling pressure today. The S&P is the only one with a support. And the difference is that on S&P, I always long at MHP. So today, with the resilience is positive, we might get a little bit of a pullback and then a trade right back up. So I'm going to take the snap up trade from here, back to there, back to there. That's the trade I want today. The 1B on BLD, this guy right here. As long as the resiliences are greater than 0, that's good. I'll wait a little bit, let it pull. No news or events or catalysts possible today except for a random Trump tweet. And in the first week, I've never really seen like so much executive order president doing stuff than I have this week. It's like Trump is sitting there like he's been sitting for 4 years planning stuff, and now he just like unleashed it all. So this week will be unusually volatile as the market starts hearing winds of like new plans and new changes. Just be aware that the market can turn on a moment's notice. He'll usually slow down a little bit, but remember in 2016 to 2020, Trump's Twitter like was a weekly to biweekly catalyst. There was always an event, something going on, threatening some tariffs in China, not threatening a tariff, working it out, not working it out. Every time he'd put them on blast, the market would tank. Then he'd say, okay, we worked it out, and the market would rally. It's a nightmare. Biden was very benign as far as his public, tweeting, and as far as his ability to shock the market. Biden really had like zero moments of that. What's up, Amy here? All right. So what I'm waiting for today is S&P has 60-68 yellow line. This is usually I don't trade long up into there, and of course only 4% of days will close above this band. 96% of days usually stay in here. So that's what I'm looking for, that the market's like exhausting this. I'm not looking to fade or sell this. I want to see this touch a stronger target that I like to pivot off of every time. Resilience is positive in NASDAQ. Resilience is positive S&P. Greater market, we'll talk about that. Greater market looks like it's bullish. We have 3 indicators that do that. Number 1, DD ratio, greater than half. That's this number right here. It's good. Nice and bullish. Yeah. Number 2, SPY is trading above MHP, so that's good. That's this number right here. So 600 is the new support for bullishness going forward. Number 3, we're going to look at something called monthly maps. Monthly maps can be a 3-month projection on SPY. And how you read this is from the Rock Scooter cheat sheet. If you use the platform, all these little tools are available in our Discord for you. Oh, this is nice and bullish. Let me show you guys. This is like basically this is the best indicator for long-term measuring the market. It's like it's really good. All it does is show you where the options risk is. And it allows you to see where people want to be positioned. If you go to something called cheat sheets in the Discord, you have a little cheat sheet help you read this. Okay, there's 4 different ways that you read a monthly map. Off to the right, so this is SPY, and this is projecting 3 months in the future. So this is going all the way to May, or I guess 4 months. Towards the end of April. So where we are trading right now is in a dark gray box. That says we are in a bull zone over time. We are in a bull zone, so market's trading in a bull zone through the end of April. If the bottom of bull zones are sloping down or sloping up, which we're going to draw a line, it is sloping down. The guy tells you bulls are going to be longing more. There's more accumulation in the market. If the top of bear zones are sloping down, just like this, bears are exiting positions over time as well. And if the both zones are pulling apart or pinching together, then volatility is increasing or decreasing. Over the next week or 2, there is practically no volatility. Volatility comes back for like the next Fed meeting and stuff. No volatility here. This is the cleanest bull market that we've seen in a long time. Monthly maps are very bullish across the board. Everything's bullish. Bull market is completely back. For the beginning of the year, this is a rally. The market is done crashing out. So now the game is, where do I get my longs? Where do I long today? It looks like I'm getting that little pullback that I want, which is amazing. Let's go ahead and focus on SPY today. I love trying to grab myself a nice little long here. Right where it matters. When people think market's going to dip and sell out, I like to grab a little long. Now I'm going to hit this. Give it a little bit, 3 more points or so lower. Let me let it take a 1 more red candle on this one. And again, like I said, this is a dangerous trade because I'm only looking for a little bit of a scalp. And we're so close to the top. It's like there's really not much oomph on this trade. This is about 7 points, which is kind of like meh. And so I don't know, like the risk and reward is kind of, I usually do 10-point stop to make 7 points. I don't know if I like that. And plus we hit a yellow. Yeah. Question is, do I still want to take that scalp? Do I still want to do it for 7 points? I don't know. The R&R is less than 1. That's the thing. All right, ladies and gentlemen, do I take that scalp or no? It's a good scalp. Not worth it, huh? I know, right? Simon's like, take it every time, hit that MHP. So 90% of days, 90% of days close on the same side of orange that they open on. So what I'm going to do is allow this to overshoot. I'm going to let it overshoot today instead of take the bounce. Because we had some usual volatility like lately. Let me let it overshoot, and if it recovers, I'll take the long. Negative resilience on NASDAQ shows a little bit of selling pressure in the Qs. So on this one, be a little bit extra cautious here as NASDAQ is kind of like shit in the bed today. NASDAQ is hitting its support right here, and that is the question. I think today I'm going to convince myself to sit out that the R&R is not worth it. Plus QQQ has a bearish liquidity map. So I'm scaring myself out of taking a long today. But not shorting because the greater market is hella bullish, right? All right, so using Rock Scooter's risk management to kind of avoid this thing. I'm going to let it pull back just a little and see what else happens. And I think that as people were saying, NASDAQ is wanting to fill its gap right here. This is the first bounce points that we're likely to get. I don't think we'll be crashing, but I would like to see this overshoot and then kind of recover. That is that little lower entry point for NASDAQ. We'll see. Just for shits, why don't we do micros today since my confidence is really small. All right, as soon as we reclaim this orange line here, I'll probably pop along on it. Just some micros, whatever. Just 5 micros. This is not a good trade, by the way. But I do want to at least make an attempt, and because I don't think it's a good trade, I am still taking along with micros. Pardon me. Just micros, dude. I know it doesn't sound sexy. Those of you in the liquidity maps class, it's good to finally see them, right? So NASDAQ liquidity map certainly showing that downward pressure. This is showing you where the flow direction is likely going to go. So that flow is negative on NASDAQ. This is the gap fill predictor on NASDAQ down at the bottom of my screen. With that being negative, NASDAQ wanted to fill its gap to the downside. What resilience does is predict the direction through this white box. It's the tracking algorithm that the NASDAQ has to track some of the stocks inside of the index. Oh, I forgot to turn my auto scaling on. That's why it's not. I mean, I'll take some free money on some micros. I know it's not sexy, but pop that MHP long. Let's see where I'd want to trade it to, though. Get a little retracement here. 90% of days close above that orange line as well, and I don't think we're in a bear market for this to crash out, but we'll see. It's volatile enough that I'm just going to trade small, anything at all. 90% of days close above here. 10% of days close down here. So that's a good long pivot if there ever was one. The only place to trade it to is just to retrace half the distance, call it quits. Let's see if anything comes out of that one. Just demonstrating the trade with some micros. I don't really feel the need to push this one too hard. Right back to half gap. Actually, resilience is now popping back to positive. That's actually pretty good. So what you're going to look for is this number right here at the bottom, this Nasdaq resilience being positive. Here's a little bit of tidbit that goes with that. Resilience is a pivot there. Greater than 0, it goes all the way back to the top. Less than 0, it resists and goes all the way back to the bottom. So Nasdaq is now popping above this. This is a great support to probably pop all the way back to the top. If this orange line holds right here, it could go right back to here. So my profit target's likely moved to there. It's probably a decent trade now. So I think things are kind of lining up pretty good. If I lose this orange, then it's dead. So we'll see. Oh no, I crashed something. What the heck? All right, be right back. Hold on. The trade today's in queues for sure. Hold on. I'll reload everything back up. How do I draw this indicator? It's automated, dude. And the Rocket Scooter platform automates it for you. The bot is posting link where you can get it. We have about 10,000 user accounts in Rocket Scooter. We have about 6,000 active subscribed members in our community, in our Discord. One of the biggest futures Discords there is. I'm Matt. If you guys never seen me before, I trade in trading contests. I've traded in the Robbins Cup. I just traded some contests Elite Trader Funding had, and I won that. I'm a live futures trader, fully transparent. I'm the creator of this trading platform that you see. I run the company that made it. So we're glad you guys are joining us today. We created a bunch of tools, indicators that you predict volume. All of our pivots predict volume. Today, we have a pretty good setup in NASDAQ. While the pressure is down, I don't hate it. There's a good support here. There's a good resistance there. So if we support here, it's good. It's good for the bigger move. Let's see if we get something. This resilience number is a gap fill predictor. NASDAQ gapped up, filled the gap. A positive white number here shows the NASDAQ is likely to return to this half gap and keep going. So this retrace is very likely. You just made 2 consecutive wins. There you go, my man. Let's go. Let's go with that retrace. Let's go. It's just micros, but I'll take the money. It's extra money. It's just micros. I'll take the money. I'll take that free money. Put it in my pocket. Ooh, ooh, ooh. Give me that money. Give me that money. Let's take that retrace. Ooh, ooh, ooh. Let's fill the gap. Let's fill the gap. You guys grabbed, yeah, you signed up for the platform? Oh, my man. Technically speaking, I should close right at the retrace just to take the profit. But if we support half gap again, it does go up and fill the gap. Oh, I love resilience. Oh, it's the best indicator on the fucking planet. Ooh. What'd you guys do? It's my Trump dance. Micros, just because, you know. Dude, buy the book. 90% of days hold. Okay, who here came to yesterday's liquidity map class for the first time? And tell me what you thought about it. We opened the doors to the public. Our courses are $1 a piece. $1 for a trading course. Because I don't need to make money selling courses. It's $1, so you take it seriously. Y'all a bunch of degens. $1. We have a series of 20 courses. 20. If you want to learn how I do this, it's $1 a day for 20 days. There's a link for $1. So liquidity maps, we talked about it. Now we have the examples, right? You guys remember when I said liquidity maps are showing where the flow kind of pressure is, right? There's downward pressure. This says bull short down, right? Which means that Nasdaq is trading. Let me make this a little smaller. You guys can see this chart bigger. You know what I want to do? Oh, the futures are still not showing up on the smaller charts. They only do them on the main chart. Okay. Okay. So here's some stuff. What do you guys learn? Y'all are going to love this. Okay. So this is going to fill the gap probably. I trimmed out because it's already in a small trade. I usually, on markets that dip like this, I at least take the retrace to half gap to reformulate what I want to do. One of our indicators called resilience is a gap fill predictor on Nasdaq futures or QQQ. Down here at the bottom, these indicators right here, they're also written for you at the top of the screen up there. It's very simple. There's a white box drawn on your platform with words open and close. QQQ, I'm trading Nasdaq futures. I got QQQ up to give me extra clues. We opened here today. We closed there yesterday. Everyone, this was a gap. Gap up. You love me, Matt? I love you too, bud. All right, gap up, right? We gapped up. So this is an aggregate of what the 100 companies in the Nasdaq are doing. They are not holding their gap. This indicator at the bottom is not that strong. It is below, let me scoot up a little bit. It is below 0. This guy right here. Okay. This is the clue. The Nasdaq is not rallying from here and why I closed out. It could, but I'm always more cautious than anything. S&P, nice and steady. All you care is this white line above 0 or less than 0. Think nothing else. Think about direction, shape, nothing. If the number is above 0, there is pressure to fill the gap from here to there. Nasdaq, however, today is lacking that pressure the S&P has. It's dipped below 0 once, which is why Nasdaq filled the gap this way because res was less than 0. The Nasdaq is tracking stocks. This is how far behind it is with the stocks. Right now, the stocks are kind of neutral because that's close to 0. So the idea that I think that this is going to rally back up is not really there because I don't have the support that Nasdaq is very strong, but anything greater than 0 is strong enough, which is why it's making a fight. If this white line dips below 0, the Nasdaq's back to falling. You have competing pressures today. S&P is good, Nasdaq's not. Now, the liquidity map you guys remember from the class is market has open, blue, open is pressure. So the open, blue, open is a setup. I'm copying exactly there. Anything below open falls to next resistance. Falls to next resistance, which is there. At this interface, you look at res greater than 0 or res less than 0. And this is how I do trade plan every day, guys. You guys watch me. I'd use only this. This is it. When I get there, I analyze res is less than 0. then once it gets there, it's likely to fucking fall. I'm so fucking good at this. I'm going to retire now. This completed my sentence. At the end of my sentence when I said it's likely going to. Literally completed my sentence at the exact moment I was going to say the word. Somebody's got to clip that. That's hilarious. Listen, guys. Okay. Where am I looking at my next spot? I don't know. Hey guys, y'all let the pros tell you what I'm gonna do. Pros, what am I gonna do? You guys are the pros here. What am I gonna do? First thing you need to do is double check that Trump didn't actually say or do anything. It literally completed my sentence on cue. That is the craziest moment in my entire trading career. Literally on cue. Doesn't mean it's crashing. But as I'm talking and saying, if resilience is less than 0, it will fill the gap this way. And all it did was fill the gap. NASDAQ and S&P is trying to catch up with the stocks. And as I'm explaining why NASDAQ lacks that power, I'm safely out of my long trade. I just took the retrace. Matt the GOAT. You guys like that? All right. So where am I looking at the next spot? Everybody, as the pros has said, Matt's likely sitting out. Because I already was engaging in a small trade. I've already convinced myself to exit my small trade, and any longs I want to take so I have a sliding scale. Everybody told you I'm sitting out. That's the rule. I already made my money. So I'm good, right? But let me tell you, I have a sliding scale. I have something. So this is my normal trade I'll do. My normal is roughly it's a baseline of 10 contracts is my normal. It's very rarely I hit a trade with the full normal though. Most of my trades are medium, which is half, or a small trade, which is like 1/10 of a normal. So 1 to 2, give or take. And then a sit out is a 0. So what I do is now 90% of days will hold that orange. So it's going to fight right here. It doesn't mean it's going to sell off. So this is why I'm not shorting either. That's why everybody's saying I'm likely to sit out. I don't have a short setup. And my long setup's too bad to take. So right here, what I do is I convince myself to take a trade with a small position. That's why I was barely doing any micros. Actually, it was smaller and small. The reason for that, I had lost confidence in some setups. So longing at MHP is usually a medium-sized trade. When I lose any confluence, which I did on NASDAQ, it was a little scary. This right here, lack of confluence. I traded small. So I move my mindset to the left one spot. My medium becomes a small, right? And then once I convince myself to sit out on a trade when I'm losing indicators, I move it over here one more time and it's a sit out. And once it's a sit out, it's very rare that I get back in. The only way I'm going to get back into this trade is if NASDAQ repairs itself and goes back, and then I'm back to trading small again. So the initial commitment I make was a small. I lose an indicator that gives me confidence, so I move my mindset over. I'm at a sit out now. Now I'm sitting out, and then as things repair, I go back this way on the chart. Now I'm going to trade small, maybe medium, maybe normal. So today I'm not committed to any heavier trades. I'm just committed to small trades. This is my position management technique. So, have that answered your question? In a short time, Bloomberg Journals will be interviewing me. We've recreated, analysis for modern traders. All we do is predict volume. That's what we tell you guys. all of my pivots on the chart will predict volume without fail. Open, close is volume prediction. We actually predict a volume profile a day before it happens. We showed that in yesterday's class. So overall, the options flow. Okay, so overall, the greater market is bullish, which means in general, this market is going up. Okay, this is without a doubt is going up. Dips are worth buying. If you put a gun to my head and said, make a decision now, I would be longing from here. If you made me make a decision right now, I would be longing from exactly here. Okay, I would take a second long if I failed on NASDAQ with the 40-point stop. I'd get out of the way. I would take a second long at the bottom band. But see, we've already spanned both distances today. So this is really weird trading. Like I said, if I were to guess at the end of the day, it's more likely to be here than it is to be down here. All things being equal. There's not any bear indicators right now. NASDAQ is just trying to fill the gap, but that's the gap mechanics. So NASDAQ is volatile right up to here. If we lose this, it switches to being more bearish, and then I've got a long pivot there. Greater market's long, I'd like to be bullish, but indicators here, the flow is pointing this way because of this. I'm just moving that right here. At this interface, I have a second indicator that talks about this box. That's greater than 0, it'll push back up. And NASDAQ is fighting to be above 0. Now, when it's close to 0, I usually take the bet that it's better, more likely bullish than not. The tiebreaker is the greater market, but whatever. And less than 0 sound the same. That's it. So we hit the bottom. At the time, this was greater than 0 when I entered. We went right to the middle. It popped above 0. And it started losing some steam as I'm talking. It went right back to 0. So I closed out in caution. And I missed out on that dump. That's the quickness. And so when people say, like, what do you do that's different than other traders? Like, how do you win contests or whatever? It's not like I'm longing or shorting any differently than you guys. But what you just saw was like split-second position management technique. And that's kind of like what I do. That's probably different than, you know. I tell people that if you want to learn trading, you need to read the book Outliers by Malcolm Gladwell. You need to see what it is that like a master of their craft does that's different than you. You may think, you know, oh, I made some money trading last month and the month before. I'm very close to being able to do this full time. And the one thing I have to always tell people is you're not even close. It may feel like it, but there's like a league difference between what you do and what winning traders do. I promise. If you're new, like 5 years or less, there's no way you've mastered your craft yet. You know, I'm 15 years and I still don't feel like I've mastered. I'm pretty decent, but there's a lot of decision making that goes into like trading that really good traders don't really share with you. A lot of gurus just teach you like charting and it's a bunch of bullshit and you guys are wasting money and wasting your time. But the difference is like what you noticed this morning, and again, I'm not bragging, but what you noticed this morning is like my entire skill set. Why did I not long here? Why did I not long there? Why did I long there and only with micros? I even had to add micros to my fucking DOM because I don't have it on there. I'm just going to do micros today. Why that choice? Why the choice to exit here? Why the description of the risk is high, it's likely to fall? Where's my second entry? Where's my stop? Everything was lined up. So if you're not doing that amount of planning, my one thing I tell people is if you're not planning like that, you're going to lose most of your trades to somebody who is. And there's a difference between, you know, you and the person that's always winning. And it's not just like they're lucky or they can read the market better. There's no predicting this market. It's a chaotic, nightmarish mess of randomness. I have stats that tell me it's like counting cards in poker, but like that's it. That's all I got that's better than what you got. 88% of days stay inside the band, 8% of days close below. I always long off the bottom. If this ratio is greater than half, it's another rule. You guys are learning all my rules today. So I'm going to wait, as everyone has told you today. I said, what I'm going to do? Everyone says, sit out and take DD long and low Qs. As Simon Dean is brilliant, that knows my strategy more than anything. Simon nailed it. That's what I'm waiting for. I'll wait. Will I short it? No, because I don't chase a short. This market wants to be long. So I wait to say if it sells and everyone thinks it's bearish, I got my back pocket bull indicator to take a long right here when everyone's panicking. And I'm going to wait for it. What am I going to do right here? Absolutely nothing. I've got competing indicators. Res is negative. It's now likely to tuck back down. Oh, back to the bottom of the box. It's having a hard time moving up. So this is as technical as it gets, guys. I mean, this is straight up textbook. There's no guessing here. So what's the difference between the 20 and the 90? Oh, Navo. So 20 is just the courses. 99 is that you get the platform. So that's half price on the platform. So you have a deal going on right now for like half price. So you get the actual trading platform is a subscription to that. And it comes with all like the tools you see that come with it. And everything that we build into this platform, you can utilize with that subscription as well. Has anybody ever passed a 50K eval trading MEQ and NASDAQ? I pass them in about, like with minis, I can pass them in a day. Depends on how quickly I'm pushing on it. When in trader funding programs, when they're like sales 90% off kind of thing, I burn them. I don't even use risk management as much. I just go all in and try to pass it because they're $20. You know, I don't care about blowing them up rather than inching my way forward. They're cheap. It's much more time efficient to hit them heavy with mini, not your paid, not your funded accounts, but the evals you're trying to pass. When they're $20, treat them like they're $20. I hit them with five to 10 E-minis on NASDAQ, and I either pass them in a trade or lose them in a trade. And then I just re-up them. And then I get like all my funded accounts for less than $1,000. It's so cheap to do it that way. Because every day that you wait is a day that the sale will likely be over. And then if you don't pass your 20, then you got to go pay full price. So in the evals, I hit them hard with like a lot of minis. And then when I go to funded, I trade them smaller with normal, like micros and things like that sometimes. So I trade my normal risk management there. So in micros, you know, you set the pace at which you need to go. So the question you have is like, how long does it take with the micro, DJ? It's up to you how big you trade. In a time that there's no sale and you've paid hundreds of dollars to the eval account, you should probably be trading micros because you're trying to preserve your capital. And when they're more expensive, you don't want to hit them so hard. When they're dirt cheap, that's when I hit them hard. If that makes sense. But it depends on your trading style and what you're willing to do at that moment in time. Like I said, my trading style literally is to blow them up as quick as possible or to pass them as quick as possible. Because when there's a 90% off sale, it costs you nothing to get 20 funded accounts. If you inch your way forward and then a catalyst bumps you out, you wasted a week and got to start all over anyways. In trading these evals, time is really the biggest problem. Despite trailing drawdown, that's what gets people the most, but you don't realize time is actually the biggest handle on their risk algo. So these funded programs, they have this risk management group, and they all have a risk model they use. Their risk model is designed to do two things. Number one, exploit the idea that you don't understand volatility. So they put a trailing drawdown on there so that volatility stops you out even though you win a trade. Hey, that's been all of us, right? You went up $10,000 and you're down 4,000, so you're profiting 6. But wait, you still blow up the account, but you're green on the trade. So the risk model is designed to bust you on that because you don't understand volatility. And number two, it's time. The trading statistics metrics, they prove that the more you do, the less you make. Ultimately, like as longer you're in the market, either A, you make a mistake, as it's called the law of large numbers. So like an example of the law of large numbers is that if you were to go up against LeBron, he says, I'm going to play basketball with you for $1 million. What are the odds that you're going to beat LeBron in basketball, right? Like practically zero. None of you will. None of you will even come close. But if he says, play me basketball for $1 million, I'll let you make the rules of the game. So what you do is you understand that the only way that you're going to beat somebody like LeBron is with a fluke, right? A fluke. You need to get lucky. And so to increase your luckiness to be on the outlier of the bell curve, statistically, there's a distribution of like how those games play out. Like a normal distribution is like this. Out of 100 games, people with equal skill, you'll win half, they'll win half or whatever. But like, you play in LeBron, it's more like, you're not going to win any games. You're at 0, he's at 100. So like, how do you win? Is that the law of large numbers just basically states the more iterations something has, the more the results of a system revert to the mean, like the mean of the system. So a fluke is you win the lottery. But if you play the lottery infinite amount of times, the probability does show itself of you having a 1 in 500 million chance of winning or whatever it is, right? So the law of large numbers states the more you do, the more you'll lose if the probability is very high that you're going to lose. And so to beat LeBron in basketball, you have to do one thing. You set the rules and try to bet on a fluke. You say, I'll play you one-on-one. I get the ball first. You're banking that you just make the shot. And we play to 1. That's it. So you're exploiting the idea that the law of large numbers states the more you play, the probability will reveal it's you will lose. Does everyone understand this, right? The mindset here? You basically just go like, I shoot first from half court, you're 10 feet away, and that's the game. And you have a better chance of that fluke being like, you make the fluke, that's it. You make the one ball, you're like, I won. And then you can say you beat him. For us, you're like, hey, I beat him in a game. But if you played to 100, that would have been the only basket you would have scored, right? So like the point is that in the law of large numbers is that same thing. And trader funding programs exploit that with you because the law of large numbers states that traders statistically fail over time. The average trader who starts day trading typically stops day trading within 3 months, believe it or not. So why do they have 5-day and 8-day and 10, like after you pass, you must trade for 10 days. You know why they do that? It's the law of large numbers. And there's the risk team is a mathematical team, just like me. I'm a math genius with perfect math SAT score. And I took the SAT when I was 12. I will explain something to you. Okay. I see the risk model for what it is. And that's the truth. They want you to be exploited. You understand volatility. So there's a trailing drawdown, and they want you to trade more because the more you trade, the more likely it is that A, you make a mistake, or B, a catalyst comes and just sweeps the market against you. So that blows you up. But what happens if a catalyst comes and gives you a lotto win? How do they cover their base there? Oh, consistency rules. So you can't have a blowout to win, but you can have a blowout to lose. And they make you trade 8, 10, 15 days because that fucking circus that it is designed to make you lose and them win. But it's okay. We're here to exploit their process as much as we can, right? So you didn't know that the risk model is designed for those 3 things. Did you know that? They're all the same, which is good because they're cheap to trade. But that's the real thing that's going on. You didn't know that. Yeah, you got to change the rules. First person to score, and I get the ball first. That's what you got to do. Are the DD bands in the platform correct? They should be, yeah. You just need to refresh your platform. Hold on, my mom is texting me. Wow, it's like snowing so crazy in Houston right now. So it doesn't snow here, but like every 5 years. And it's like literally blankets of snow outside. It's like a foot of snow in my driveway. What do I think of footprint chart trading? I have no idea what that is. Streets are covered. Yeah. Like I go out, I step in, my foot goes like all the way through. It's literally like powder snow. And I feel like I'm like, I went outside. It was just insane. Like snowfall. It's not just, it snowed a little bit overnight and it's flurries. Like I go outside and it's snowfall. I've never seen snowfall in Houston like this. This is the best snowfall we've ever seen. So do you guys understand like the speech I gave you? Trader funding programs are doing 2 things. They're explaining your lack of understanding of volatility, and they're trying to keep you in the game longer. Because the law of large numbers states that the more you're in the game, the more likely you are to lose. And just in case lightning strikes and kicks you the other way, a consistency rule prevents you from winning all that money. Because what do they do when you bust the consistency rule? The penalty is you must trade for longer. So even the penalty of the catalyst giving you a win in the right direction is to force you in the game longer, which again increases your likelihood of failing. So the parameters set in these programs are designed that way to make it hard for you in all directions. You can't luck into a win. And the design is keeping the game as long as possible. So the goal here is to sit out as much as possible and only strike when it matters. As you see, everyone at Rocket Scooter who said in chat, if you scroll up, Matt, what are you going to do? Matt, what are you going to do? Matt's going to sit out. And I'm sure they understand why. When I ask people, what am I going to do from here? And they're going, Matt's going to sit out. You know why? Because the law of large numbers, less is more. I know where I'm going to hit. Everybody here, look at these. These are people that all taken the courses. They know exactly what I'm going to do. Am I buying the dip? No. Am I shorting this? No, because market's very bullish. Am I waiting for a better entry? Yes. Sit out, sit out. So these are people that I just asked, what am I going to do? They all said sit out. They know me so well. Hit that like button, people. Ooh, 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 ooh. I'm in Texas. I'm in Houston. So trust me when I say, if it's snowing in Houston, I know we're kind of like, we're like a bunch of, you know, wusses down here in Texas. Oh my God, it's like 30 degrees. It's so cold. And everybody in like Minnesota, TO is like, it's like minus 33 over here. My brother up in Kansas, he's like, oh yeah, it's like minus 15. Did snow that much in College Station? It did? It didn't? Oh, really? Yeah, like if you looked at the map, the clouds were all kind of like, it wasn't like a blanket of clouds. It was like spots where it was like, at some points it's like, oh, it's going to snow. And some points it was like, oh, it's not going to snow. Come to Canada, I'll show you cold. Yeah, I know. Pickle was like, I got to show you guys a video of Pickle. Pickle hasn't pooped in like 2 days. I feel so bad. And he finally did. Like I took him outside. We have a puppy, a little dachshund. He's like 5 months old now, 4 or 5 months old. And he wouldn't go outside because like yesterday it was frozen rain. It was like freezing rain and wet. So he doesn't want to poop. And then I took him out like again in the middle of the night. He didn't want to poop. And then it started snowing. He went outside and wanted to play. So like I'm crate training him right now. And then like I took him outside and he just looked at the snow and came right back in. But he's like hobbling like this. Like you could tell, dude, he's fucking pinching a turtle head down there. It's trying to poke out. And I'm just like, you gotta go, man. I even put a pee pad down just to be like, look, you can shit in the house this one time. I'll let you. He just looks at me like, I don't understand this world. So basically I took him, I walked outside. I didn't want to step in the snow or anything. So I like gently tossed him like a foot so he would like land in the snow just to be funny. And he goes, he just like falls into this snow that like covers half of his body. And he's like freaking out. And then he loves it. Then he's like rolling around in it and then barking at it and then chewing on it. Like, I don't know why dogs love snow so much, but it was just hilarious. And he's just like, and then, and he's just going crazy. And then he like hobbles around in the snow. And then finally he drops a deuce. And I was like, time to go. Wrap it up. So then I took him back in. But dude, dog hasn't pooped in 2 days. It's an English cream dachshund. They look like baby golden retrievers, and they don't get bigger. Let me show you like pictures of them on the internet. Kind of like what Pickle looks like. Oh yeah, they're so adorable. Like this guy right here. This looks just like Pickle right here. But yeah, that's like what he looked like when he was a puppy. Like little baby golden retrievers. Like that looks like little Pickle when he was a puppy. And that's what he looked like as a puppy. And this is kind of what he looks like now. That looks actually just like him. Yeah, they're cream color with brown with black noses and black paws. Yeah, that was like iDoc's dream dog. Okay, so at the standstill, I don't short except for off of MHP from the bottom if there's a good place to short to. So, like I said, I don't think the market's crashing out, but I'm waiting, right? You see how I'm not doing anything right here, and it's just randomly volatile and dipping. I'm going to wait. It will take like an hour or two for this to kind of complete if it goes down here. The better trade is to watch resilience kind of like play out and be better. These white numbers go above zero, then it goes back to the top. Like this is the trade on this indicator. So right now there's just no good setups, but I did make a pretty decent amount of money and cash out. You guys don't forget to hit that like button really quick if y'all like what we do, and sub to the channel if it's your first time here. Our stream is like quadrupled in size in the last month. There's a reason we're going like big viral here. We created a brand new trading method. I don't use any technical indicators. I don't use chart patterns. I don't even use historic data. I don't even look at the past data. I don't change my chart from a 1 minute chart. I don't even look at yesterday's open and close. I don't do supports, resistances, nothing like that. I just let the flow tell me where price is going and I trade off these pivots. That's it. But bottom right, click the thumbs up button. Give the algo some love. When you need to scare people, do you tell them you have a badger dog? You tell them I have a badger dog? Is that what it looks like? All it is high volume pivots. And then there's arbitrage indicators. This is arbitrage and this is arbitrage. These are tracking what the stocks are doing. Like the problem here is that the NASDAQ is wanting to fill its gap to the downside. NASDAQ is gluing itself to where that arrow is drawn. It's gluing itself to yesterday's close because this negative number tells you that NASDAQ wants the bottom of that box. And as you guys see when I talk about high volume pivots, there's always high volume pivot. The S&P is fighting to save itself. It's slightly above zero. This is a number between negative 100 and 100, by the way. The orange number is the tiebreaker at this orange level as well when you get there. Used to breed a champion line bull terriers. It was easier to artificially inseminate them than to encourage them to mate. Really? Dogs are so finicky when it comes to stuff. They're picky and you never can figure out why. Mark's been only using the platform service for a few weeks, but notice that QQQ and SPY also bounce up old MHP levels. And that's very true. And we've observed that too, but we haven't made it into a strategy. The observation of that is because monthly hedge pressure is hedging long positions being held for very long periods of time. So if somebody has anchored a support somewhere, and then you pass through it and some firm that's trading against them has hedged heavily there, then that firm is acting at that same spot. And so there's some residual hysteresis, what we call it, because somebody acted there before, they're likely glued to that spot as well. So an example is I longed the market really big at some level, right? And so somebody shorted to me and they bought some calls. So they're neutral. And the market dips, so they're fine. But then those calls go in the money, and the call sellers, which is the third party of that equation, now has to long a huge amount of shares at that level to hedge their balance. So they have to force themselves to long at that level. So every time the market hits that level, they're going to have to long the most amount because gamma's maxed. So a firm that locked into a trade there is likely going to be causing that same activity, the residual hysteresis. And we say, Mark, that's what we've noticed. But the problem is that we can't quantify that into any kind of repeatable method because, like, you notice it's like, yeah, previous MHP is support today as well, which is absolutely true. But how often is it support? How far back do we look, and how far back will all of them be supports? The question comes down to what we believe is we're observing something random, but the explanation is very clear. We can't guarantee that every time it would do that. That's why we never turn into a strategy, but it's been theorized in this group that it's worth, that's what the theory is, and that it's worth chasing down to see if there's like repeatable stuff with it. Well, not yet. With the strategy, we don't have to worry about worry on long-term predictions. What do you mean long-term predictions? I say that the stock market's unpredictable. That's like the basis of all of Rocket Scooter is that the stock market is unpredictable, and fundamentals and technicals incorrectly claimed over the last 50 years while they have scammed traders into fucking courses and books and all kind of stuff by telling you the stock market's predictable. I say the stock market is not predictable. No one can predict where it's going to go. You can't. I think that the stock market is an aggregation of random Brownian motion, just random fluttering of up and down, people's opinions coming in and out, changing. The observable patterns are just you finding patterns in noise. The market is nothing but noise. There are some parts of the market that are predictable, but parts, and that's what we exploit, the pieces. But the entire stock market is not. Long-term forecasts are shit. News outlooks are shit. Indicators that try to say momentum is shit. It's all shit. None of it predicts the stock market. The world's best hedge fund manager, Jim Simon, said the same thing, that the stock market is nothing but noise. But how does he predictably do well? He plays the stats. And how his fund has been one of the best performing funds in history is because simply he's playing statistics. Inside of the bulk fluid, which way the particle goes is random, but the overall fluid somewhat has an ebb and flow. Markets go up 70% of months, right? Under certain conditions, we can predict 70% of candles will be green on the daily. Under this greater market on the right side of the screen, when these conditions are true, all three of them, 69% of candles on the daily will be green. That's a stat. So like, the daily interactions are like random, right? But on the day, 7 out of 10 candles are going to be green. So if I just randomly threw money at the long side under these conditions, I'd win 7 out of 10 days. And so that's where traders do well, is playing the stats and the odds, not guessing every little blip or move in this market. That's what we do that's different, right? According to ChatGPT, RSI is a 91% accuracy. It's funny that something that's based on, another thing, percentages and probabilities like that don't make it actionable, because the funny thing is that an example is like RSI, right? RSI oversold, overbought. Think of it like this, right? It's oversold. At some point, it will snap up back into here. At some point. The question is, once it's oversold, the probability that it moves, 90% of days, or actually 100% of days, at some point in the future, the further out in time, the higher the probability that you snap back. The sooner in time, the lower the probability of snapback. So it's a time thing. If you were to look at how often when you go oversold on the RSI below 30% or whatever, does it return to the middle within an hour, 2 hours, 5 hours, 10 days? That's the part where it gets you. 100%, given an infinite amount of time, 100% chance it moves to the other side, right? When it consolidates on the momentum, 100% chance. So ChatGPT is not wrong. But ChatGPT doesn't understand the question. Under what time constraint? Because that's the real answer. When you see the RSI go overbought or oversold and you long, it can do this for like hours, days, and the stock market's just plunging. And then ultimately it snaps right back up. Yeah, when the RSI is below half or below 30%, it'll snap back to the middle. And while the RSI is correct, the stock market just gobbled up that momentum and did this. You still lost on the trade. So the RSI doesn't correlate with the stock market 90% of the time. It's actually right on point at 50%. The market's like Mother Nature. Sometimes we're all tired of preparing. It happens. But yeah, so it's funny that ChatGPT says these things. It's programmed like to read what people's, or it's understanding what people said about something. But given an infinite amount of time, everything's 100%. When two moving averages cross over and you bought the dip, if you wait at least a month, price is likely going to be higher than where you bought, because 70% of days are green under these circumstances. And 70% of all trading months are green as well. So as long as you're just long the market, all indicators eventually become 100% given 100 infinite amount of time, which is crazy, right? Which tells you that the real enemy to technical analysis is trying to predict time, when something's going to happen. And that's where me and Mr. Simons both agree, mathematicians, both of us, that state you can't predict when something's going to happen in the market, because the market's just a bunch of humans doing random shit all day long. When are people going to sell? Somebody out there is just sitting there contemplating, I think I'm going to sell today. Some traders like, I'm going to long, and he's long, and his boss comes in and says, hey, we're selling today. Okay, he's got to sell with no logic, no reason. Somebody ordered him to sell. He just pushed the button. Like the idea that your squiggly wiggly purple lines can predict, a direct order from your boss at a hedge fund is the goofiest shit I've ever heard in my life as a mathematician. It's like eye-rollingly funny. But people still use them as, bias anchoring, confirmation bias. I mean, it's what it is. So it's not like they're bad, but they just don't predict anything. You're joining late. Out of curiosity, how much stock confidence do you have? How much stock confidence you put in the monthly map? Only ask because you're less than 28. Of course, the map looked bearish, but looking back, the market turned bullish after. What are catalysts something to look out for, I assume? Yeah, so here's the way maps work. So markets are going to move up and down to find buyers or sellers. This is like the normal circumstance, right? Markets go up when the buyers are looking, when the markets go up to look for sellers, markets go down, look for buyers. Okay. So I'm joking here. So I have a cold, sorry. So the idea is that the chance that, so the market has we start at the top. Greater market structure is bullish. The market is going up. If I open up a daily chart, it's going up. If I open up an hourly chart, it's going up, like the longer term time frames, right? So it's dipping in a greater bull market. The question I have is, do I buy this dip or not? As you see, I'm not chasing the short because the market's ultimately bullish. I'm waiting for better dips to buy because the market is generally bullish. Now, when does structure break and markets collapse? It requires the bulls to be overwhelmed by sellers. And so what's the probability that a bunch of just random buying and selling, random firms, random traders all sell at the same exact time? Well, it usually takes a news event or an announcement to align everybody to act at the same time to overwhelm the structure. And so when trading, you have events like CPIs, PPIs, and all that, Fed and stuff. Those events create that alignment where everyone buys and sells at the same time. So avoiding events, the market's just ebbing and flowing, and the probability is like 100% that it's just random and not predictable. So the part that is predictable is that there are hedge funds and market makers out there shorting and longing shares based on their option structure, which is what we exploit here. So without a catalyst, without an event, without something propagating like one directional movement, the market just ebbs and flows in a specific direction because there's an underlying wind of pressure. Today's underlying wind and pressure in NASDAQ is down. Today, it's a down day in a bull market. But a lot of the other indicators are also bullish. So it's not likely a crash day in a bull market. It's likely a, doji day or spinning top day in a bull market. While there is greater bull pressure of people buying the dip on a longer term, there's some selling pressure today. So I use days like this to say, well, it's probably going to consolidate in the middle, and it's exactly what it's doing. And I'm exactly sitting out, not diddling in the middle because I expect that to happen, right? So that's basically what you're observing. My confidence in the monthly map is extremely high under the conditions of no event, no catalyst, no irrational market. Irrational market is when any of these lights are red going against the move. So an example today, none of them are red right now against the move. The move is the bull market's up. The only one that's bad is S&P is breaking hedge pressure to the downside. Not the best. Everything else looks good. IWM's bumping up. VIX is bumping down. So all of this is pretty decent. So my confidence is pretty good that the map is going to pretty much show me what the day is going to do. That answers your question. Come on, let's look at the market. Thanks, man. Appreciate it. Yeah, with RSI, you know when to buy and sell, but you never know when it's going to turn. The problem is RSI is a momentum thing. So if the momentum is linear, the RSI won't change much, but the market could still be tanking. That is the problem with the RSI and the math. So RSI being negative doesn't mean that's the reversal point. RSI being negative and not getting any more negative means the distance of the range is the same. So the market could fall 20 points, 20 points, 20 points. And the RSI could be steadily at the oversold point. It doesn't imply that it's done selling, and that's the problem. So yeah, you're eventually in a reversal point, but it can continue to crash on you. So yeah, catalysts are everything to look out for. When there's an event or a catalyst, I don't use liquidity map. That's the whole rule. So when there's no event, like today is a slow news week. There's nothing until Friday. The only thing that can move the market is Trump tweeting or saying something for the most part. Other than that, the market's going to just ebb and flow to what we call the sum of least risk. So you can see that NASDAQ liquidity map is pointing down. NASDAQ in general is kind of like pointing down. But I'm not betting on a crash because what's going to cause every trader out there to immediately sell right now when their own option structure is telling you they're looking to buy every dip they can? So without an event today and without Trump tweeting something, the market is not likely to crash. And that's how I think of markets when I trade. Is VWAP higher than 50%? All indicators are going to roughly, given enough time, there was a study that some traders did in Brazil a long time ago, and I wish I could find it. It was on Reddit. They measured like the efficacy of technical indicators, and they found out over infinite iterations, no matter what they did, almost every indicator became 50-50, which is important to understand because the predictability of an indicator on a random market is random itself. So the predictability is you're going to guess wrong more often than not. It's actually immeasurable because it's random. But they said that the outlook on most trading algorithms they wrote on each individual indicator was roughly 50% win rate on all of them. There was not one that had a competitive edge that predicted the market. And simply put, the reason and rationale they have for that was because of the idea that price is a data set, and almost all indicators take that data set of price and put it into some equation and create your indicator, like, and then there's an output. So you take a data set, convert it some way, and somehow the output magically can predict what the same data set is going to do. It doesn't make any sense. The output is based solely on the internal components of this data set. So how does it have eyeballs to see outside of the fucking data set? That's what I tell people. I know I cuss and I'm giving like, this is mathematics, right? It's built wholly on this data set. How does somehow you can take some data set, convert it to have some kind of inherent ability to see more about itself than it already knows about itself? This is a mathematical faux pas. This is 100% of the data set. This is all the available data. There is no more data hidden in between these components that is not seen by the universe. There's no entropy. There's no leakage, right? Candles is 100% of the data. How can you feed that to an equation that somehow can see inside of the data set? Oh, there's more information here. Can I use the R word? I can't use it. It's still politically incorrect. It's ridiculous. Okay. I know Trump's back on August. We can't drop the hard. He's back in office. We can't drop the hard R, but that just sounds ridiculous. For me as a mathematician, I laugh that technical indicators have some insight to see within that data, to see something else, right? Does this sound like, I know I'm explaining math, but do you guys understand that explanation? How can manipulating a data set somehow see extra stuff inside of it? Does that make sense? It sounded ridiculous to me from the start. It has no extra visibility. Oh, we put it through this function and took some averages, and all of a sudden it implies that there's hidden data, the components of momentum. It implies that in between these candles, there's some kind of extra data there that means it's going up. It's silly. It's actually silly, right? So because indicators can't see any extra information, they're all contained within the same data set. They all provide the same accuracy of the data set itself, which, as we say, the stock market is random. And I believe the world's greatest hedge fund manager over any fucking hair bun, fat beard, tie-dye shirt, Lambo driving trading guru sitting on a fucking yoga mat telling you, buy my crystals, I can predict the market. Full of shit. You guys have been scammed for like hundreds of years, buying trading books and stuff that try to tell you there's some magic power in VWAPs and moving averages and TGM squeeze. And I mean, it's all bullshit. It's 100% bullshit sold to you by guys living their best life who sold books and go on TV shows to talk about books. It's goofy. Like it's so funny that the younger modern traders from our era are starting to become smart enough to see this stuff. And even like there's a lot of people like me out there preaching the same song. It's just about time in the modern day that you have something a little different. And that's why we were like, okay, market's unpredictable. What can you predict inside of it? Is there pieces that are predictable? And what we've found is that we can use options to predict volume. And then like resilience and DD are just arbitrage indicators. They're saying that the stocks are doing this and the index is doing that, and they're going to push towards each other. That's basically what it's saying. And that's a component because the predictable part is the S&P is equal to the sum of the stocks. So if people are putting long pressure on SPY and short pressure on the stocks, given enough time, they're going to push back towards each other. And that does make sense. So our indicators are exploiting principles that are repeatable. The S&P doesn't just go straight up, all the stocks go straight down. At some point, they collapse and track each other again. So then we're like, okay, that's a good indicator, right? Stocks are becoming delta hedged to the positive side. Okay, why would the S&P crash then? Okay, let's create DD ratio, something like that. you know, there's more shorting than longing due to the hedging, the gamma effect of hedging. Okay, so just below this blue and orange line, the market's going to have a little bit of selling pressure. Okay, it's pushing down just like it shows. But at the bottom of this box, it's going to try to fill the gap this way at the same time if the stocks are doing the same. And now the stocks are no longer filling their gap. So now the market has lost its power to push higher. I have no more faith in the market going up today. The pressure is pushing it down slowly today. The greater market is holding it up on the bigger time frame. So now I just say I'm going to sit out and thank you. There's the recipe of a doji, right? And as everyone said, I'm sitting out for the reason. So there's different parts of the market. Do I know where it's going to go? Absolutely not. Like, is it going up or down? I don't fucking know. I just know I don't act here. But I do know I have a really high probability in the greater market that I'm longing. If it falls to here today, oh my God, I'm longing pretty heavy right there on that bottom green band. Do I need to inch forward and make 40 points in NASDAQ, risking this volatility? 60-point drops in 10 minutes? No, absolutely not. I can see it from a mile away. I can see that from a mile away. Volatility's high. Probability is low that it's going to move from here. Let me catch the extreme. If it's a doji and it's closing in the middle, let me trade the edges. Right? Does that make sense? As people say, yeah, done with indicators, done with indicators. They're not bad if you just use them what they are. What an indicator is a reorganization of your data into an easier way to see it. That's all it is. You're taking data that's like this and just smoothing it out a little bit. That's really what you're doing. Like, you know, you got candle data. It's all over the fucking place like this. Candle data. And the moving average is going to make it like a little cleaner and easier to read at the expense of a delay. So the smoother, anybody that studied mathematical transforms, right? You take like a linear algebra class or an advanced calculus class, you study transforms. You apply a transform to a data set, it smooths it out. You guys remember I'm sure only like 5 people here are getting a boner when I say fast Fourier transforms. They're like, I haven't heard that since college. But when you hear about mathematical transforms, it's basically like you take data and you apply some function to it to change it to another data set. It's basically what an indicator almost is. But anytime you apply a transform to a data set, the smoother it is, the more delay that it actually is. John's like FFT, Space Spike is like, ooh, there's the five math nerds. I found him. So you guys know, so at the expense of smooth, like the smoother you make the data, the taxation on that is an extra delay. That there's no loss of entropy to the universe. So you can't just create something from that data set. That's why I'm telling you, the reason indicators fail is because of entropy. You can't, there's no entropy loss of the surroundings. There's no negative entropy flowing into the system. You can't create something out of nothing. It's like the universe matter can't be created or destroyed. So information can't be created from an indicator. So unfortunately, the entropy is not, it's not lost to the system either. It's contained. So all you can do is convert energy from one to the other. So whatever data you have is the best you can do, which means price itself is the best indicator. You can reorganize price in a certain way to look better on a chart, but the better you make it look, the bigger the delay is and the inflection points of that data set. So what you do is basically what you're doing is you make it smoother, and there's a tax called delay. Your moving averages cross 10 minutes, 20 minutes, an hour after the price moves. So the infinite delay with infinite smoothness. So unfortunately, I kind of had a reel went viral when I did this. My favorite thing to say is, if you were to take every technical indicator you can ever make, okay? If I have price, I'm just going to build a data set right here, price. Am I doing a good job? Because by the way, those of you that are here, especially young traders, this is like advanced college level math and engineering. Am I doing an okay job at least explaining very complex topics like in a way? Is that understandable what I'm saying? Am I making sense? If like only 5 people are getting a hard on with me saying this, I'll probably stop talking. But if like for an average non-mathematical ear, does this kind of make some sense? I'm trying to explain it like in a way that makes sense. Okay. Like you can't create information. That's like the point, right? The candles don't have hidden data like wrapped up in it that you're somehow extracting. All right. So here's the point. Like you have a data set, right? And you put it through function A. Like let's just take it and manipulate it with transform called A. And it creates an average, right? And I'm going to put my squiggly wiggly like blue line on my chart. Okay, that's good. All right. Let's create another one and let's call it like function B. All right, let's create a second one, function B. And it's another indication. Now this one's called an RSI and it's going to create another squiggly wiggly line. And let's put that on my chart. And somehow when I keep adding these things, here's function C, right? I'm going to create a third indicator and it's another squiggly wiggly line, looks different. And somehow I keep adding these things to my chart. They're not creating extra information. They're reorganizing it differently. The smoother it is, the more the delay. So let's create an infinite number of these functions, right? And we'll span the boundary conditions from smoothness equals 0 to smoothness equals infinity. Well, this is like math language that states that I'm going to create an infinite number of functions. And each one of them, smoothness can be 0, then 1, then 2, and 3, all the way to infinity. Integrate f of x, right? Which is just, it's just adding them all up. I'm going to take infinite smoothness, infinite delay. So what you create is a sum of every indicator you can ever make. Some of them have infinite delay. Some of them have 0 delay, right? So when you add them all up together, well, mysteriously, the interesting thing about it is that when you add up all information and then somehow you go, okay, so most of them are delayed. Some of them are close to no delay, but the signal's delayed. And somehow you create some kind of magic function. Now you go out to the universe, you find God himself, you go, hey bro, give me a function. And God goes, don't worry, bro, I got you. Here's a coefficient. I'm going to give you this random number called a coefficient that reverses the delay, okay? God gives you his fancy number and says, you know what? You created this data set. You created like an infinite spectrum, a jubilee of fucking noisy indicators, but there's a delay when you add them all up. There's not a perfect signal that's on time. And he goes, don't worry, I'm God. I got you a number, a coefficient. It's 42. Just add 42 to your number and you remove the delay. And you go, thanks God, that's amazing. I now have all my infinite indicators and I've removed the delay with the magic God number. And God says, yeah, that's correct. You have a data set that tells you which direction it's going with no delay. And he goes, you just went through all this work to recreate price. He said, congratulations, you recreated the data set you started with. He goes, you're back to where you started. Isn't that crazy, right? So basically the funny part is that the sum of all technical indicators, you add 1 million of them on your chart and somehow you remove the delay, you just end back up at price because you can't, because God laughs at you and goes, only I can create stuff. You can't create extra information. I'm sorry. I can. 42 is the answer, but I gave you that number just so that you can learn something from this lesson. You're like, oh man, I can't create stuff out of nothing. Oh man. That makes sense. Funny, right? I love giving that little speech there. But yeah, all your indicators added up, the best you can do is circle back to price, which is the data set with no delay, which is great. All right. I'm going to put this as a good one. It's fun days. All right. Enough math talk for today. Market's going nowhere, but I'd like to see a quick dip in return. Resiliences are trying to make a fight, so don't discount this. Once this number starts to make a fight, Nasdaq's going to try to make a run back to fill the gap. So I'm actually really watching this right now. It's a gamble to take a long here to fill the gap there with Nasdaq being where it is, but when they both sustain positive, it'll pick up some bullish momentum again, and that's what I'm waiting for. When you realize nothing matters, the universe is yours, Rick Sanchez. Dude, I love Rick and Morty. He posed like so many existential questions and like Like my favorite bit was the what was it, the little robot, what was it? The robot that passes the butter. You remember that? It's like, I know I might copyright strike, I don't care. Y'all haven't seen it before, it's so funny. Let me turn it down. Have y'all seen that?
Hey, Rick, I have to make a project for the science fair this weekend. You think you could help me out?
Whatever. Well, I mean, traditionally, science fairs are a father-son
It's so savage,
Well,
dude. I love
scientifically, traditions are an idiot thing.
Morty, I think it would be fun for you to work on a science project with your dad.
Yeah, Dad, why don't we do it together?
Yes. You backed the right horse on this one, son. We'll get out the
Do you have winter
crayons,
tires? I
brew
don't,
some
man.
coffee, and
I don't.
knock this thing out in 2 or 3 days.
What is my purpose?
Pass the butter. Thank you.
Dad, I need a ride to work.
Maybe Rick can give you a ride. I'm helping Morty with science.
I'm busy.
Doing what?
Anything else?
What is my purpose?
You pass butter.
Oh my god.
Yeah, welcome to the club, pal.
That's so funny. It creates a robot for some mundane purpose. The robot's intelligent enough to know that it's basically got no real purpose in life. You know, that's funny. Was it paying Pat? Why do I hear Pat Weiland?
On any of the videos, take a screenshot of it saying that
Oh, it jumped into Pat's. It must have recommended Pat after that. After that video, you pass butter, and the robot's like, "Oh my god." How savage, right? I love, that's such a funny bit. All right, the traditions quote is one of the best. Oh yeah, I know Beth is voiced by Elliot from Scrubs. I didn't know that. That sounds like her though. All right. So right now the market is looking like it's trying to sell, but it's picking up a little bit of momentum. So this is good. These numbers stay above 0, then it will likely pick up some steam to keep going. I do like that idea. It's still Nasdaq's right on the edge. Let me peek at S&P really quick just to double check. If you guys like what you see, y'all got to come to our classes. We're doing our boot camp. It's do one of two things. If you guys just want to come to our classes, if you came to the free one yesterday, sign up and come to the rest of them. It's a 20-day boot camp series. We go 20 days. We start over. That's the link. It's $20. It's like $1 a day. You guys have to come to classes. I don't do much teaching here, but if you guys like the commentary or like the tools, we're covering resilience today, actually. This indicator, this R you see on my screen, that's today. How I used it today, how I use it all the time. So the S&P right now, you see S&P is good, so S&P is holding the upper part of the box. S&P is trying to break monthly hedge pressure. This is one of these greater market signals. That's not good. So S&P losing monthly hedge can create some issues. I expect it to hold, but we'll see. Yeah, it's still bullish market. Yeah, 100%. Is the course the same thing as a Zoom sub? Yeah, it's the same thing. Less than the cost of two days of shitty coffee. Yeah. At some point, I told myself that we'd make the boot camp $1,000 if you just wanted to do it. And then I told myself, you know what? Let me see if I can get thousands of people to do it at $20. It's been crazy. We have had hundreds of people sign up just recently in like the last week. It's crazy because we gave a free session and it's like everyone that went to the free session signed up. So it's not a cash grab for us. The dollar makes you take it seriously. That way you don't go out there and be stupid with free information and then you didn't put any work into it and then you go out there and blow up your trading account and then you think Rocket Scooter's stupid because you were stupid. So if we charge $1, we lower our probability of people just like glossing over it like it's perception of value. So you will think that it's worthless if there's no value, if there's no price to it. So Kevin says, remember, guys, your souls are just having a human experience on Earth. So everyone has a great day. God bless everyone. See you guys tomorrow. Hey, man. Wow. That's really beautiful. Profound. That's what I like to hear. There's some blessings this way. Right here. This is the link for the class. I just typed it in chat. We had a huge turnout yesterday. It was crazy. But yeah, so in 20 days masterclass, we go through risk management. We go through trading strategies, betting strategies, market avoidance strategies, all the good stuff you guys want as a trader. Now, which way do we go? Nasdaq is still not doing so hot. I don't think I want to short this today, but I would say that if there's any kind of movement, it's really hard to predict because like the span of the market yesterday was really weird. And then we tapped into like this high a second time. These bands, I usually don't trade outside the bands. And when you tap them, usually my day is over. So it's run that distance twice. So it's one of those weird days where there's not a lot of good opportunities. So what I like to do is just kind of sit back and wait. The good opportunity is to bet on the bigger bull market like I'm doing. If this thing were to vol today, maybe I'm back in right there just to bet that it stabilizes and makes its way back to the middle. Do I want to chase like this amount of trade? Not really. Are there any events today to cause it to pick up momentum? Not really. Unless Trump tweets something and then the market ends up right there. Okay. But the idea that Trump can tweet something in his first week, he's doing executive orders left and right, everything from border control to renaming the ocean. You got like a lot of stuff going on, which is kind of funny because I made a tweet yesterday. Trump piling out like 30 different executive orders in his first day in office, pardoning the Jan 6ers, doing everything. But yet there was no executive order on crypto, which is the weirdest thing because over the weekend I thought Trump was supporting crypto and generational wealth and he's going to launch a coin and all this stuff. And, like his company was associated with the company that launched a coin, just like everyone. They do a handshake deal and he lends their name and they pump the coin and then it dumps and all that generational wealth movement. I went through the tweets and neither him, Eric, nor Melania ever said the word coin or crypto. They said, buy our meme. They basically literally said, buy our JPEG. They all called it a meme to avoid the legality of calling it crypto coin. So in case the regulation changes, SEC can't ever bust them for investment advice because I can see the legalese there, but I guess crypto traders are like so busy eating spray paint that their brain cells don't work anymore. I don't fucking understand people. Trump launched a coin. Trump didn't launch shit. A group of kids launched a coin and Trump shook hands with them because Barron probably said, hey, look, let's do this thing. It's not illegal and everybody's becoming a billionaire. And he's like, all right, let's do it. I'll like free money. He's like, yeah, let's get, mom to do it too. I mean, like they're all like, completely hands off, not overseeing the project, not managing the project, not ensuring the coin's integrity. Probably doesn't even know how it works. He probably just like hawked to it, was like, yeah, sure. Like they were like, look, Trump, we're going to make you rich. Just go with it. We'll use your name. Like, okay, cool. And I'm sure they have some plan with crypto. I'm sure. But the tinfoil hats are out there. But his inauguration speech, there were no executive orders about crypto. No mention of the word crypto. No mention of the word coin. No mention of the word Trump meme or anything. And my joke was, yeah, but he renamed the ocean. So I guess he's focusing on the important stuff first. Like, I don't know how many times crypto traders can be bamboozled. Like I've looked at the data of what, the infrastructure is on the blockchain, and it is a very sophisticated, very elegant technology. Like, unfortunately, no matter how many times I read through this, I can't find any practical use for it that makes it better than any standard database. Like, I don't see it as being, its utility in finance is so small. Its utility in computer science is pretty big. Its uses are limited. So I don't understand from a mathematical perspective it's somehow game-changing use in the world. I just don't get it. When it becomes big, I'll use it, but it just doesn't, blockchain doesn't make much sense to me. As far, I mean, I understand the math and what it does, but it doesn't make sense to me as why people see it other than an ability for people to pump and dump speculative assets that have no actual value under the guise that there's some game-changing technology that goes with it. And every single coin has lost most everybody money. And the only people that win are the early birds. There's no difference in this than the penny stock pumping of Jordan Belfort in the 90s and 80s. I don't see anything, and yet even Trump name coin fooled everybody. When will people learn the lesson? And everyone's chasing the volatility because they think they're going to become a millionaire. And nobody here became a millionaire. Did any of you guys? No, because you weren't an insider, and that's who makes the money, and that's who posts on socials to propagate the same behavior. Don't worry, guys. Join my Discord. Look at how much money I made. It's always the leader of the Discord making the money in the penny stocks. It's always the coin creators making the money in the coins. It's never you. It's never going to be you. You might make some growth on Bitcoin over time, which is nothing wrong with that, but it's not generational wealth. It will grow like any stock. Everything's going to go up. Not a terrible investment, but the fairy tale is not real. Like I said, blockchain is a very elegant and beautiful technology. I actually applaud it for being so elegant. Like I said, but I just don't see any advantages it has over a practical database. It doesn't make any game-changing things around the world that makes it. Then it's not big. It's not like AI. Like AI is gonna like drive my car and brush my teeth and wipe my ass for me. Okay, I get it. But I mean, it's like that's the future, right? That's the explosion right now. Class is at 4:30. But it doesn't mean you can't catch the wave of momentum and squeeze a little bit of money out of the juice. But to get in a Trump at 18 cents, you had to be a very wealthy Bitcoin sniper with millions of dollars to waste on the ones that don't make it. So people that jumped in at $5-10 and rode it to 60, that's it. You got to learn to like ride the wave and get out. The idea that one of these things are going to pump and make everyone millionaires doesn't make sense because people have to cash out, which causes liquidity to drop. And so it's first in, first out. I mean, that's the nature of any market. Once people start realizing it into cash gains and the liquidity goes away, then it dumps on everyone. You got to get in, get out. Good strategies for generational wealth. Thanks for the insights on crypto. The generational wealth is not available to you in the stock market. Or the crypto market. It's just the fact. I have to tell you guys, I know I love saying that you guys are going to all do well. I wish I could promise everyone you guys millions of dollars in stock market. The majority of you, especially going through our program, will likely end up where you started, which is good because you didn't lose your life savings. The overwhelming majority of you will not become a millionaire as a day trader. Unfortunately, that's just the way that it is. And I would say 1% of 1% of 1% of 1% of 1% of you would make $1 million in crypto, which means everyone here won't. You might make something, but you're not going to find the generational wealth there. The odds are just so staggering that you are going to be the person that got in first when people out there manipulate the game so they can get in first. It's an insider's game designed for pumping and dumping, and you're not on the inside. You will always be on the outside. Yeah, like as far as like an elegant database solution, blockchain has a lot of utility there. But as far as it being like the new digital standard in currency, I see it no better than an easy way for people to pump speculative assets that have no value and dump them onto the public so they can sweep your money from your pocket into their pocket. And that's all it's ever been, really. And I see long-term effects in Ethereum. I see that that's probably the future. Trump's got a significant investment in Ethereum. So maybe he has plans with Ethereum. There's your wealth idea. It's not investment advice. But Trump's, their company's portfolio is very heavy in Ethereum right now. So clearly, his plans are to go that direction. So it doesn't seem Bitcoin is the direction It seems Ethereum is the one, right? So the question is, now that makes sense. Now the bet is, do you think Trump is going to change something to favor Ethereum? And that's where I think, okay, there's an investment opportunity there for some utility because I'm betting on the fact that Trump will create some utility for Ethereum that's bigger. Why would he invest in it if he's the one that's changing some of the narrative there, right? So that's what I think. It's not the Trump coin or Melania coin. It's not the one you're looking for. It's the thing that's going to become some kind of technology that's going to become a big mainstay that everybody's going to need. It's not some meme coin. So I've barely put in my DD bands. No, if you have a futures account, they load automatically. If you don't have a futures account, you click this little button right here, and there they pop up. If everyone, and then IceWell said everyone's a millionaire, no one's rich. Well, to make them, what'd you say? You deleted your message. What was that? Message retracted. LimeWire. I'm not trying to talk you out of investing or trading, but I am trying to make sure that the story pumped by people that you're going to make a fortune in crypto, please buy this coin, is designed for a vacuum. Somebody that's telling you to do that has a speed advantage over you, and they get in first. So every person they bring into the club pushes their coin higher because they were in first. That is the scam. Penny stock pump and dump is the same thing. I have a free Discord, guys, that give free trading tips. I totally tell you which coin to buy. I don't even charge for it. I tell you which stock to buy. That's what everybody says. And you know what it is? They have a way to get in first. Everyone that comes in and buys makes some money. Zach Morris did the same thing to you guys. They had a system to get in first. And they just need it's called the greater fool theory. All you need is a bigger sucker than you to come in after you do. And so, free Discord is the best way to do it. Free Telegram. I'll tell you which coins to buy. Whatever the case may be, they're the one with the advantage because they're in first. They have a method to get in first, and you don't. And they're just dropping the tip to you. So basically, the only way you make money is to be a greater fool than everyone else in that Telegram, which means you need to devise a way to get in first with them, which means you need to go, go give the leader of that Discord a fucking hand job every weekend so that he gives you the tip first. And then you'll be a millionaire. Give him a little reach around. And that's what you need, an advantage over the other people in that Discord. That's the only way you're going to make the money. Not listening to the tip. You need to play with the tip. That'll help you out. Ensuring those who trade are aware of the risk and reality, as Garrett has said. That's really the risk and reality. The only way you're going to make money on the meme coins is you devise a method to be first. Now, you could be a sniper that snipes out the liquidity as it grows. And that's the way to do it. But the problem is when you snipe out coins that have liquidity, you have to test out their authenticity, make sure they're not scams, like read on the project really quick. And you have to have all these algorithms that do this for you in a split second. Because once they start going from like 10 cents, 20 cents, 50 cents, that's like the first minute of time. You have to be the first one in there. And for every million that you put in Trump, the million fizzled to zero on the other projects that didn't work as you're sniping them. So to make 10, 50, 300 million in the Trump coin, you actually are a person that lost $1 million in 100 other coins before Trump took off. So yes, you make those millions of dollars, but you really have to show people each time your sniping strategy failed, because the majority of coins will fail and go to zero. So your investment goes to zero. So the sniper made his big win, but I'm telling you, there was a whole lot of loss to get there. They didn't just pick the coin out of a hat. So many of those coins get that artificial liquidity, and they invest the same way and snipe it, try to pump it as much as they can, which is what they do. They snipe the coin, they pump it to everybody, they hope it goes up, and then usually it fizzles out. They try to use your exit liquidity in this game. So if you're not doing that level of sophistication, or you're not giving a hand job to the guy that's doing that, so he gives you the information first, you're never going to have the advantage. When I trade the ES or the NASDAQ, when the signal is stronger or better. On the bull side, S&P is the stronger bull signal. S&P has the pivots nearby. That's the other question. Which one has the pivots nearby? Dude, your streams are so entertaining. You love the humor. It's a full-time job. I don't know anything about how market makers handle crypto. I know nothing about crypto exchanges or how they're managed or who even makes them. That area is like completely foreign to me. Yeah, our courses are recorded. You can watch them at any given time. Ooh, 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 ooh. Don't forget to sub to the channel, guys. Sub to this YouTube channel. We're here all day, every day. All right, let's see what we're going to do today. So it's not giving any... I'm waiting to see NASDAQ turn up and look a little bit better. So right now, SPY is kind of like approaching its end. NASDAQ is trying to make the potential to push higher. Like I said, if you would put a gun to my head, I would have taken the long setup. But there's just not a lot of, like, I don't know, decent trade on this one. I do still think the market's going higher. I don't think we're going to sell off to there. So I don't think I have a trade anymore. Ooh, 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 ooh. You remember mining ETH like a lot of individuals in 2016? That's the only time you can say you got close to making a decent amount from speculative investment. You can make money in crypto. You just got to be on the inside. And that's where the advice to you guys. Go figure out a way to be on the inside. Don't go start a pump and dump community. But like that's the nature of the game. I run a marketplace for trading discords. I know thousands of trading community leaders. I study them. I know what they do. I know what their business are. I know everybody's business model. I know every game in town, baby. The penny stock pump and dump is fun. They have a network of communities that work together. 10 or 15 community heads all work together. One person feeds them all the stock idea. They go promote it to everyone else. And then it's a trickle. They even time their releases. Hey, I'll mention at 8:30. You mention at 8:45. You mention at 8:50. And then they like time their releases out, and then so let me reset my platform here. Pretty neat, right? Hold up. You ain't giving the leader of that room a little reach around. They ain't giving you nothing. You don't have enough money to convince them to, hey man, I'll pay you. I'll split the gains with you. You're not gonna be able to pay them off. You're gonna have to like be their best friend or something, or get on the inside. And then you got to find suckers to pump to. That's how you're gonna make your money in crypto. You got to be the pumper and find people to pump to. Now, again, I'm not saying you're not gonna make money investing in crypto for the long run. You probably will. Will it outperform the S&P? Will it outperform AI over 50 years? Maybe, but I don't know if it'll outperform it by like a level of generational wealth. It can maybe 2x or 3x the gains of S&P easily if it becomes a utility thing. You might put 10 or 20K in now, and by the time you retire, it could be a couple $100K, sure. I don't think it's going to turn your 10K or 100K or your 10K or 20K into $40 million. I don't think that something with utility that has liquidity does that. The only thing that does that is something that has no liquidity before anyone's looking, and it moves on the volatility. Once it becomes the mainstay of the utility, the liquidity piles in, the hedge funds pile in, the market makers pile in, the exchanges pile in. It becomes a thing that loses that momentum. So I think if it becomes a big thing with utility, there's growth there, but I think that the narrative is to sell you that this coin is going to make you rich tomorrow. And those are people that want you to buy so they can slowly leak their long without crashing the price on their investment. Somebody has 1 million coins. Everybody that comes in and buys 1,000, they sell 1,000. They watch it. Oh, somebody bought 1,000, I'll sell 1,000. Like if they just start dumping their stuff, they kill their investment to zero. So they have to go out there on a crusade to say, hey guys, support my project. Hey guys, this is going to the moon. Hey guys, load up now. Hey guys, buy the dip. Every fucking joker, shitbag loser on social media promoting coins says the same thing. Oh, it's got future. Buy the dip, add to it. Everything you buy, they turn around and sell. They're just unloading to you slowly. Just be careful. Oh, you passed your ETF in one day? Let's go, baby. Not to like ruin your mood on crypto. Just be careful. If you want to win the big win, go out there and figure out how to be first. That's the advice. Go be first. If you hear about it on social media, that's not where the wealth is going to be made. You need to go on a campaign to figure out how to be on the inside. And then you have to figure out, point number 2 is how you go to sleep at night knowing that you made your money scamming everyone else. But then you could say, but I'm selling. What's the quote from Margin Call? We are selling to willing buyers at the fair market price. So it's not really a scam. You're actually just fighting people that know less than you. And that works. What was I trying to do? So make sure you're in first. That's the trick. What was I was looking up something. What was I doing here? I was trying to look up something. Nasdaq's starting to repair itself, so Nasdaq is looking good. Look at Nasdaq futures real quick. So I think the market's probably going to start trying to push. I just don't see any upward momentum. I think that right now what Nasdaq might actually do is on the short squeeze alone, it could pop to return to where we started. And then I think it's sort of like, maybe ends up in here. And then by the end of the day, maybe it could end up there and keep going. I like to see that momentum pushing this way. I just don't know if it gets there today, but by tomorrow, I think we're back up to there. Now, today's going to be kind of a toss-up. The momentum is clearly higher. The market's clearly bullish. So at some point, we're back on that path. Is that point today? I'm not really sure. Tomorrow, though. Remember, we got no news until Friday. This is going to be a nice, quiet week unless Trump starts hitting the tweet machine. Baby. So we'll see. Are you guys enjoying the snow day? I need to show y'all some pictures of the snow. It's crazy. There's some earnings, I guess. I'd love to see a quick dip that lower band, though. Netflix reports today, and Trump has an announcement at 4 infrastructure plan. And Q will move tonight on the earnings. I really think so. I think that this little kind of like middle reverting kind of setup here, I think that wherever we end up being is going to maybe move us way slightly lower, and then earnings pops us right back up. I think that might be the case. I don't think you're wrong. I mean, the momentum is clearly, bullish. But we'll see. I'm not willing to just we're consolidating. I made some pretty good trades out the door. I made some really good longs yesterday. Really good longs today. I'm just scalping inside of here. I would love to see the market try to dip as the greater market's bull, but we'll see. We'll see. We got a new VIX number tonight, by the way, so we'll give you guys a new fixed triple D, which is our like one of our good volatility indicators. Ooh, baby. Maybe I'll just chill out and play Call of Duty all afternoon. Enjoy the snow. Well, they map on Netflix? Yeah, let's see what Netflix is looking like. So liquid and flat. Unfortunately, Netflix is giving you no insight. It's kind of sitting at middle, a little bit of bull liquidation over the course of the month and bear liquidation. All Netflix is set up to do is show you volatility this month. So essentially it's a coin flip inside of the range. So since it's long squeezing and short squeezing, the trick with that is knowing that you're not likely to break the range. As the sells are there and the buys are there, you tend to find liquidity inside of here. So whatever Netflix bump is not going to break the range. So I think that, Netflix not breaking 1,000, not breaking 720 on earnings. That's the way I see it. So like it's when both sides are liquidating, you need like new bulls to enter the picture to break out. You need or bears liquidating or something like that. But ideally is like when both sides are selling and buying, then the range and momentum that was created is likely to contain the price on the blast. That's the way I perceive it. But like I said, that's my guess. Netflix ain't showing you anything, man. That sucks. Wish it would. But it's saying nope. It's saying we're in the middle and it's a toss-up. But what you are seeing is that both sides are like leaving as so typically when both sides are like leaving a trade, there's a little bit of extra volatility, but there's no additional momentum. So whatever blasts up, likely to revert to mean. Whatever blasts down, likely to revert to mean. Like Netflix is accurately priced where it wants to be. Both sides want to get out of their position equally. Either both sides have profited adequately or both sides are fed up with their loss. Either way, long squeeze and short squeeze together produces liquidity as both people exit to each other. Therefore, liquidity doesn't break the range and create an illiquid move to the upside or downside. Liquidity typically means ranged. Class is live at 4:30 Eastern, and they're recorded. Happy Friday. So they're recorded and posted in the Discord. Classes are about an hour to an hour and a half, depending. And there's a Q&A session at the end. So the recording part's usually like an hour or so. Our classes are by far, I would say, the most valuable thing per dollar you can find. Because they're only $1. But everybody do me a favor. If you have taken the classes, go to your Rocketplace dashboard. Go to my purchases and leave a review. We really pride ourselves on our classes. And if you got something out of it, especially for the price, please leave a review. Since we started the class a couple months back, there's 65 5-star reviews. That's it. Everyone seems to love it. I'm sorry, 3:30 Eastern, my bad. 3:30 Eastern, happy Friday. So 2:30 Central my time, 3:30. 30 minutes for market closes, my bad. It's Trump's first day in office. That's right, Vlad. We're going to sit here. We're going to be positive today. It's called $1 is all I need. Oh, that's funny. Oh, I knew what I was looking up. I need to go on YouTube really quick. I think I should create a crypto coin. That's what I should do when I think about it. I want to create a coin And I need you guys to help me pump and dump it. Like, it's going to be fun. We'll make a project. We'll all be on the inside. We're literally going to call it rug pull or pump and dump. We're going to do something. We create all this artificial liquidity. We're going to tell people we're going to scam you. We're going to literally rug pull this. But we make it funny enough for people don't care. We make enough memes and hilarity around it. We give it the stupidest name. Like, there's a coin called Elon Fart Trump or something. People buy this thing? Oh my God. It's so okay. Let's call it Melania fart. I don't know. Let's go with something really, really, really dumb. Like teddy bear ball sack or something, like something really stupid. You know, but make it cute and funny. You have to put the word fart in it, or put the word sneeze in it, or put like some bodily fluid in there. People will buy it, right? And we're going to tell people we're going to rug pull it. We're going to promote it to everyone we know and tell them it's the next big thing, but also say, by the way, we are going to run with your money. We're going to cash out and you're going to lose all. And people are going to say, yeah, but I believe in the project. Okay. No matter how much you tell them, we will still find people that we say, buy this coin. By the way, it's a scam, but buy it. And people will still buy it. Even if you tell every person to buy it, it's a scam. The Melania gap fill. That's what we'll call it. Okay. And so rocket fart. There you go. And so you could tell people it's a scam and they will still buy it. You can say, by the way, you're going to lose all, but they're like, yeah, but I still am going to get in on this. I'm going to rug pull you. Yeah, but I'll probably make some money before you do. All right. And then we'll tell people, and then we'll tell the Discords. We'll coordinate the attack. We'll create a huge push about it. We'll name it after something famous. We'll call it, yeah, Melania Fart. Whatever. And then we'll cash out. Like I said, we'll cash out, just completely rug it. And then we'll like make fun of people, say, we told you so. And they'll get mad at us for a minute. But then we'll tell a sob story about, well, we did it for charity. I saw some of these. Well, we're supporting some medical research on this rare medical condition. And we're going to donate all the money to that. You know, your investment is helping us fund medical research. So people could be like, oh, well, at least for a good cause. And I could say, well, no, I mean, yeah. And then that's, you know, we mean well. And that way that'll give us leverage to come back again and repeat the process the next month with a new coin. Because, you know, people will forget. I mean, this is a beautiful way for all you guys ready to become rich. I need some executives for the company. I need some coders. I don't know anything about crypto, but I don't even care. I'm just the idea guy. So I need someone that knows something about crypto. Help me set it up. Let's run this massive scam. And let's just do it for fun. And let's all become rich. And it's not illegal, I guess, if the president's doing it. The butter passer. Oh, I love it. So I need executives, CEOs, promoters, Discords. I need all the pieces together. But the rule is you must tell everybody who you're telling about the coin that it is a scam before you tell them to buy it. Invest in the project. But by the way, we plan on rug pulling this project. And I bet you anything, it'll still blast up for a week or two. Even people just want to invest their money for the meme. To be part of it. Because that's what sells the crypto. Because the funnier you make it, the goofier it is, the more people are just like, whatever, let's do it. You're my DJ, hype people up. All right, I need a DJ to like go to the clubs, push it up. I mean, that's all we need. And unfortunately for you guys, since I'm the owner, I'll probably make the lion's share of the money. I'll pay you guys some things, but I'll probably scam y'all too and just not pay you. And there's nothing you can do about it after working for me to make the coin. So just keep that in mind too. And I'm telling you that ahead of time as well, that y'all are also going to get scammed working on this. But it's for a good cause, right? Name it scam coin. I think there is a scam coin. Regarding my course for $20, all I need is to sign up. That's correct, PC. You just need to sign up for the courses. And they're all in Zoom, and they're going to give you access to our Discord. And how many, like, the funny thing is, how many of you guys still want to work for the project, even though I tell you I'm going to rug pull you guys as well? Some of y'all are like, whatever, it sounds fun. I'm in. I'll still do it. That's like the goofy part of this joke, is that no matter how bad or stupid it sounds, people still, they love it. They can't get enough of it. It's so weird. Take my money. That's how crazy it is. People just got that one taste of like that, click the button one time and made some money. It immediately resets your brain. All your dreams are within your reach. That's what you feel. You didn't do anything with your life. You didn't get a degree, or you didn't get a job. Or you don't have a future. You don't have anything. You hate your life. You hate your work. You hate that you don't make money. You hate the people on social media around you drive Lambos. And yet you pushed a button one time and it made you so many thousands or tens of thousands or maybe even hundreds of thousands of dollars in your dream life is well within your reach. That rewires your brain and hypnotizes you into believing something about yourself that's not there. And that belief is that you're a talented trader, that this is your future. And that's the biggest lie to begin with, is that people are lying to themselves, thinking that this is their future. That's the real talk. It's not the scammers are lying to you, you're lying to yourself that this is within my reach. I've been doing this for 15 years and I'm telling you, this is not within your reach. Even day trading futures is not within your reach. You're in for a long, grueling process to learn this business, to get good at trading. You're not going to push your buttons to get lucky 20 times in a row, maybe 2 or 3 times. You might make a couple hundred G's and have some spending cash. But there is going to be the smallest percent of people making a living doing that in crypto or elsewhere. So you just got to be careful, realistically approach the market for what it's worth. You know what? I'm gambling. Maybe I'll make a win. Maybe not. Then that's the truth. If it's like, you know what? I think I can make generational wealth doing this. Oh boy. Don't quit your day job to day trade crypto. Please don't. Don't. Your wife will leave you. She'll take the kids. You'll have to pay child support. Like, it's just like, after 2 or 3 or 4 years struggling with it and having to come up with excuses to explain to her and the family why you can't pay the bills, you're going to be in a very bad situation in your life. I've seen it happen to people. You want to be a crypto bajillionaire or a trading bajillionaire, you either need inside information or you need to be the smartest guy in the room. We can help you with the latter part. To be smarter than the traders you're trading against. That helps. What? The bot was like, oh wait, no, automatically held for review. I didn't mean to hide the message. Hold on. It didn't like your message calling the coin Vagina Lioner. What the heck? Can I unhide that? That's hilarious. Is that the name of our coin? IceWad, the bot didn't like what you said. The Vagina Lioner. Like, I like that name for the coin. That's gonna make us super rich. I'm sorry, that's gonna make me super rich. I'm not gonna give y'all anything. What's the matter with you? I love it. That's great. Elon Fart Trump, I heard this, is an actual coin name. There's a fart coin as well. I mean, imagine their great grandfather telling their kids, gather around the fire, kids. I'm so glad the family came to great grandpa's mansion for holidays. Let me tell you a story of how I became rich. Are you guys familiar with Fart Trump Elon? You're not, because you're not smart like me. You're a bunch of idiots. And I knew something you didn't know. And that's how I was able to afford all of this. There's the goofy name. Like I'm saying, good luck to these projects. Not throwing shade. I don't know any of these fucking people out there, but it just sounds, Occam's razor. You know, the easiest explanation is usually the correct one. It sounds ridiculous. It's likely ridiculous. So want to make a futures reliable side hustle. Yeah. And like, that's attainable for people. Like make a little bit of money trading futures, make even a salary trading futures. Yeah. You're not like full-time day trading futures aren't like, you know, bringing in, you know, your influencers on Twitter and stuff. They're not out there pulling in 20, 30, 40 million a year trading. You know, pulling a respectable salary as a trader. If you can make $1 million as a day trader at home, like $1 million or even $500,000, that's like pats on back. You're in the percent of people that do that. You know, hustle a decent salary as a day trader is what you're aspiring to do. And it takes a lot of work to get there. But that's more attainable than like, you know, don't see day trading as like my Lambos in my future. Even though I do well as a day trader, I still don't go out there and, you know, like treat it like it's like, okay, I got Lambo coming down the road. It's like a lot of people that do that have composite income of a bunch of sources. They're selling something, they're selling a, you know, subscription to something, and they're promoting some product or thing to go with it. They're combining their income and trading. But to think like, you know, the millionaire day trader, that is like the rarest of the rare. So don't be like, I'm going to quit my day job and become a day trader this year. It's like, think like I'm going to make some side money trading, and then maybe after 5 or 10 years, I can feel confident enough to do that as a full-time job and convert. Because, you know, you're going to have to put in the effort and practice. Like, think of it like 5 years or 10 years of you being good at this is the time to take it full-time. Unless you're just that natural who just gets it after a couple of years and you're consistent after a couple of years, then that's your risk to take. But I tell people, it's like, you got to be, yeah, lunch money is good, man. Making some extra bank here and there. I mean, like pulling a $10,000 or $15,000 payout from one of these prop firms, investing $5,000 to get it, was $10,000 you didn't have. That's good money. I mean, that's money you could put to something, you know, money you could invest in your whatever, and money you can invest in yourself, trading money. I mean, it's real. Like, that's the real thing I tell people is like, you know, your job as a trader, number one, is just not lose the money you have. That's your first goal. If you can do that, you're halfway there. If you can walk away after a month of trading and not be down anything, you're good. That's the biggest hurdle, to not lose the money you have. And after that, it's just like, okay, how do I make it into a little bit more? And then once you make a little more, how do I make it into somewhat more? Okay, how do I make it into a lot more? And then as time goes by, then you fast forward 30 or 40 years, and yeah, you'll have millions in the bank. Is the story of most people I know. Day trading is a good side hustle. As you see me, I'm pushing. I'm about to pull out probably a 20K payout from Apex. I'm still in their rounds of getting smaller payouts. I just took a 15K from Elite last month. I mean, it's just extra. It's just extra money. Dump seems coming. We'll see. Yeah, Vincat, I don't know. I'll disagree with you. And it just takes time. And time goes by, you'll be happy. If you're doing well as a trader, you'll be happy with the choice to do it full time if you're doing okay. But it's like at the end of your life, you'll have a lot of money from it. But like the idea that, the social media folks it takes money to make money. If somebody's driving a Lambo, they've got millions of dollars to trade with already to make the millions of dollars you see them make. It's like, that's the one downside of trading. If you don't have a lot of money to trade with, you're not going to 20,000x your money to create $1 million overnight. You're going to have to grind it out like most people do. And then when you're there, take the big risk. Do you want to make more with it or not? And the maps are good, dude. They're solid and bullish. I don't know what I want to do today. This choppy shit market sucks. I took the first trade up. I took here to there, and I haven't done anything since then. Okay. I don't know what we're going to do. There's a fun class. All right. Sign up for the courses. We'll see you guys at 3:30. I'm just going to call it. I'm going to chill for a couple hours. Greater market all bullish, man. It's looking hot. We're still getting negative res on NASDAQ and positive res on S&P. So today, just watch your resiliences to see which way it's going to flux. If NASDAQ gets above zero and S&P is above zero, it'll start picking up some momentum. But unfortunately, with that being said, NASDAQ's not picking up a lot of momentum, and there's Netflix earnings. So, you're going to get a blast one way or the other. And so I think by the end of the day, it's going to either pop or drop. And I kind of want to take to the side of caution that this is the middle, and I don't want to be in a trade in the middle. The fake dream that is sold is very irritating. Yeah. Like me, I grind out a living trading. I grind out a pretty comfortable living trading. I drive a nice car, I have a nice house, things like that. But I mean, I tell people it's a living to give you, obviously I do very well, but I don't like sell that idea because it's not attainable for most people. So I'm very quiet with my posts. Other than bragging about my office or my computers, I'm not like, dousing you guys with like trader porn impression, like check out my car, that idea is selling an image that's unobtainable. And it's fun for some people to be like, I want to be in that environment. I don't care. This guy's a Lambo. It's fun. I like feeling that. Then understand that that's totally your taste. But I tell people like, I never use my picture of my car to sell something because it's unfair and it doesn't give a realistic expectation. Plus, like we're known for being like one of the groups that actually have something to teach. It would kind of go against the principle of teaching you something if at the same time I was like shamelessly, using manipulative sales tactics to like get subs. You guys would see right through that, and people wouldn't trust that I had something good to sell if I was like laying against my car, touching myself, like check out my car, buy my course. I'd get a whole different group of people. I wouldn't get hundreds of, however many reviews of 5-star reviews saying this course changed my life. I would get people that were like, the same kind of kids that would buy Fart Trump. Just people don't want to do the work, click a button and get money and think it's easy. Instead, I get like smart folks like you guys. Willing to put in the work and learn. What about books with the Lambo in the back? Like Ty Lopez? I've spoken with him before, by the way. Last year I was making my rounds in the there's like this world out there of like motivational speakers that like travel and and they go to like, we went to a couple of events. We got networked pretty heavily, but all they're just selling you like stuff. They're like, I talked to him for 5 minutes on the phone. And they are all selling like, we can teach you how to do social media marketing. We can teach you how to get your product in front of people, how to do it's like it's like all the same group of people. And then once you're in, dude, they just flood your email and they flood your text. Come to this, come to that, come to this event, this event, this event, this event. Sign up now, sign up now, sign up now. You trade full time, but definitely not buying a Lambo anytime soon, but way better than the operations manager job I left. Like that's where I like to see is that people are like, I can make a living doing this. That's what I like. That's the reality. If you can make a couple hundred G's a year after tax on trading, that's good. I mean, that's, you're working a couple hours a day. You get a lot of freedom with that job. I mean, that's where the real value is. He lives where you live. Oh, cool. Do I think Pat Wheeler's legit? Yeah, I think he's legit. I mean, all the people that I know on YouTube, they're not lying to you. They're not scamming you. What they're showing you is real. If you mean by legit. But there's a difference between like being legit and do you have value in following or listening to them? That's between you and them, right? So like Does he make money trading? Clearly he does, right? He got a massive payout in Apex. You know, and he's very honest about it. He's like, you know, I kind of blew up 1 million accounts to get here. And like there's integrity in that honesty. He wasn't just like, you know, pulling the wool over your eyes and not like telling you the truth. He's like, yeah, I kind of sucked at trading for so long. And, you know, I knew him a decade ago when he was really like, you know, grinding it out and wasn't really killing it like he is now. So I've seen the guy grow. And I give him props because I'm actually proud of his growth. I think it's good. And like, so him, like the OG YouTubers like him and Trey Zabat and myself, I like those. We've all been around the block a bunch. I like both of them because they're honest about what it is. You know, whether they're having good months or bad months or whatever, they're not like lying to you, right? What you see is what you get. And like, what I think is like Pat's theatrics are well calculated. I give him credit for being really smart. He knows what he's doing to draw a crowd. And if you were to sit down with him and have a heart to heart, he'd probably laugh at himself and be like, yeah, I'm a big fucking goofball and I do it for views. And he knows what he's doing. He doesn't believe it himself. He just does what he does to draw a crowd. And it's very smart and calculated. And for that, you have to respect someone that knows how to put on an amazing show. Jim Cramer made an entire career out of that. People just like you and people like him. I like him. I mean, I'm a fan. And the question is, would I buy his course? And I don't know much about it to give you any info on the style because I'm not really sure what's in it. But some people, they do that because they know it draws a crowd. But he doesn't take himself seriously, which is why I respect it. People that do that and then take themselves real seriously, it's like very cringy. Yeah, I bet you I get heart to heart with him. He asked me to come out to Florida. Maybe I'll go out and trade there one time. If I have a heart to heart with him, like behind the scenes, he'd be like, yeah, I'm just, you know, I know what I'm doing. I'd be like, I know you know what you're doing, man. I respect it. I think it's very entertaining. I think it's fun. But also because he shows you his trades, you know. So I think there's legitimacy there. You got to lean into the drama and have fun with it. Yeah. I've always was waiting for my day where he starts talking shit to me, but I've been lucky enough, I guess, that I've escaped the radar. He hasn't really poked fun at Matt or myself. I think because we all grew up through the ranks together on YouTube. We're the OGs of YouTube. But I'm like, one day my day will come and we'll just, if we talk shit about each other, it'd be funny. We'd probably shake hands behind the scenes, just have fun with it. He's always been classy to ourselves. And somebody told me that one time they mentioned me in chat and he was like, oh yeah, Matt's good. And I was like, oh, that's nice. That's nice to hear. I like to give props to get out there, people that get in front of a camera and trade for everyone. It's not easy to do this. Imagine the pressure of trying to make money, but then trying to make money under the pressure of thousands of people watching you do it and making fun of you if you fail. And the pressure to perform, put on a show, and like sustain the momentum. It's 10 times harder doing it on a camera. So I respect anybody that does it on camera. For sure. How much should I say I need to be able to make before you can believe that your full-time job? It's not money, it's time. If you can survive and make money after like 1 or 2 tax years, you start evaluating that as your potential. After taxes, what you got left, was it a bull market? Was it a decent market? How much savings you have? So you need at least a year of savings. I tell people to pay your bill, or a year of bill money put aside. So, you know, at minimum, so you can take your first year. If you start to find out that you're running out of bill money and the year's ending, go back and get another job. But I like to say after like a couple of positive tax years where you've made a decent comparable salary to support your lifestyle is good. And then having a year worth of bill money at least saved up to take the leap, and that's good. Gives you time to find another job if it doesn't pan out. And then you're trading with money that you're not afraid to lose and you still have bill money to pay. That's the next step. So IceWild has some good suggestions around 6 to 12 months of money. Yeah. You have to basically dispel, or like this, well, you have to create an environment for yourself where you're not trading to need the money. Like You can't ever say, I need groceries this week. I got to make a trade. If you're doing that, you're already going to lose. Because, right, like me, I have infinite patience because trading is just extra money. Like it's not paying the mortgage. I've got a buffer of money. So I'm not in a hurry to make anything. And that's kind of what comfortably in trading, you need to be able to afford the patience to wait it out. What happens in a bear month, a bear week, a bear quarter? You're not gonna be able to make anything. You might lose something. Volatility's high, you might take a lot of losses. You know what I mean? I didn't really do much in December and early January. You didn't see me make a lot. I was sitting out a lot. But that's kind of the trick is that when markets stabilize, I got my money back, ready to go. It's really time. You have to survive long enough with enough money to not need it. Do I recommend somebody's service that you trust? Then you help you with day trading as an S Corp or LLC. I want to start trading under a company. I have no experience with that. I would call a tax attorney to advise you on all the thing. An accountant maybe, but you want a minimum. Hire a tax attorney. Someone that can set that up for you. An accountant can't set that up for you. And advise you on all the pros and cons of it. Or a securities attorney they may know a little bit about it as well. But people that specialize in taxes would answer the question. Just Google around your town so you can find somebody. Like, hey, I want to set up a trading business. What are the pros and cons? And they'll be the ones to give you some good advice. $60.68 is being fought really hard on the S&P. Oh yeah. I'm not shorting this at all. I mean, I'm just hanging tight. I like how the markets, I got that good move right out the door, which is nice. But other than that, just kind of chilling. I love how Rocket Scooter is showing me, push it out. All right, I'm out. I love y'all. If you haven't taken our classes, you're missing out. It's $1 a day and a 3-day money back if you don't like it. Go to this link. I just now typing it in chat. Go to this link. You can get the courses for $20, or you can get the platform and the courses for $100. That's half price. Check it out. 3-day. If you don't like it, get a refund. But the courses are going to blow your mind. Read the messages and the reviews. People have all said, game changer, blow your mind. There's nothing like this. Oh my God, why haven't people found this sooner? We have a whole different style of analysis. We teach you why markets move. We're doing not technicals, not fundamentals, not charts, not chart patterns. We're teaching you how to find high volume pivots, market betting strategies, and market avoidance strategies. Those are the 3 cornerstones of what we teach. These are the things a trader needs. Risk management is the key to making money as a trader. The very first class in this bootcamp you take gives you a guaranteed trading strategy that involves randomly longing the market. It's funny how mathematically it works. It's not a real trading strategy, but it shows you that the reason that trading strategy works is because you're managing your losses and the size of your position rather than focusing on where you get in, where you get out. It's just a thought experiment to prove that the reason people don't make money trading is because they're betting incorrectly, betting too big for the risk they're taking, and it's not where they get in or where they get out in this random market. It's not your indicators that will save you. It's your risk management. How can you survive in this market? The first class alone is a mic drop that presents that case to you. That if you lose 20 days in a row, and at the end of a trading month, you have half your account still left, and all you did was randomly long the market, over time, you would still make money, even with that. Because the bull market eventually comes back, and all you need to do is survive. We made a trading strategy with that thought process. $1 per class. So you can easily check it out. You want to spend $1? We'll see y'all at 3:30. Classes are recorded. You can watch them Today we cover resilience, the indicator that made me the money it made me today. This is one of my favorite tools. The way I got out of that trade before it dumped. We're going to talk about that today.